Looking ahead to the coming trading week of June 8th through 12th, 2026, the markets are setting up for some highly volatile events. Between major central bank decisions, highly anticipated U.S. inflation data, and some big name earnings, there are several catalysts that eToro traders should be monitoring. Here are the best areas, assets, and setups to watch next week. 1. High volatility earnings plays, stocks. eToro is very popular for trading stock earnings, as these events can cause double-digit percentage swings in a single day. GameStop, a perennial favorite among eToro retail traders, GameStop is expected to report its quarterly earnings this coming week. GME is famous for dramatic, unpredictable price action around earnings. Look for volatile intraday scalping or swing trade opportunities. Oracle, ORCL, and Adobe, ADBE. Both tech giants are also slated to report. With artificial intelligence still dominating global market sentiment, any forward guidance related to AI integration and cloud monetization could drive aggressive buying or selling. Watch these as barometers for the broader software and tech sectors. 2. Major economic data and central banks, forex and indices. Next week is packed with heavy-hitting macroeconomic events that will dictate the direction of global indices and currency pairs. The U.S. inflation print, CPI and PPI. U.S. Consumer Price Index CPI data will be released on Wednesday, June 10th, followed by the Producer Price Index PPI on Thursday, June 11th. This is the most critical event of the week. If inflation comes in hotter than expected, the S&P 500, SPX 500, and NASDAQ 100, and the SQ 100 could face a sharp pullback. If inflation cools, expect indices to attempt to push to new all-time highs. ECB interest rate decision. The European Central Bank meets on Thursday, June 12th. Traders should keep a close eye on the EUR-USD pair. Volatility will spike depending on the rate decision and the tone of the ECB's forward guidance. Bank of Canada rate decision, scheduled for Wednesday, June 10th, making USD-CAD a prime forex pair to trade for those looking to capitalize on cross-border interest rate divergences. 3. The AI momentum and index exhaustion, ETFs and indices. The U.S. stock market has recently been on a historic winning streak, with the S&P 500 recording numerous all-time highs in the first half of 2026. This rally has been heavily concentrated in mega-cap tech stocks and AI infrastructure stocks, like NVIDIA and VDA. The trade. While the trend remains overwhelmingly bullish, some options market analysts are noting signs of near-term buyer exhaustion. eToro traders might look for buy-the-dip opportunities on tech-heavy ETFs like QQQ, or consider hedging strategies if the U.S. CPI data on Wednesday triggers a broad market correction. 4. Oil and geopolitics, commodities. Crude oil, or WTI. WTI crude oil futures have seen upward pressure and elevated volatility recently due to ongoing geopolitical friction in the Middle East. Trading oil CFDs or energy sector stocks like Chevron, CVX, or ExxonMobil, XOM, could provide short-term breakout opportunities depending on how the geopolitical headlines develop over the weekend and into next week. Summary for your eToro watch list. If you prefer trading individual equities, put GME, ORCL, and ADBE on your radar for earnings volatility. If you prefer macro trading, wait for the Wednesday-Thursday CPI and central bank data to trade the breakouts on EUR-USD, USD-CAD, and the NASDAQ 100. Remember to utilize tight stop losses, particularly right before the inflation data drops.